Alright everyone, and welcome back to the channel for another Bitcoin and crypto update. So, I posted this over on Twitter, I'm sure most of you know this already, but we had our GDP yesterday, we had our FOMC, so the two most important dates are out of the way now. Yesterday we obviously found out the Fed was not pivoting, and today we found out, just like we've been predicting, just like we've been talking about for a while, second quarter GDP's out, it is negative, we got minus 0.9%, and after the first quarter we already had shrunk minus 1.6%, so we're in a textbook definition of a recession. Now, the White House basically has been talking about more or less changing the definition of the recession at this point in time. Nonetheless, by the textbook, if you do Google it until they change it, the definition of a recession is still back-to-back negative GDP. So before we do jump into the charts and look at how Bitcoin is reacting to this recession, let's first of all look back at the most recent, very prominent recession. And the reason why I didn't say most recent recession is because technically we actually got negative back-to-back GDP in the 2020 capitulation. After we had already blasted out of this, we found out, hey, we had negative back-to-back GDP, and then what happened after that is the month after, it was completely positive, absolutely blasted through the water. So everyone kind of grazed this off and didn't talk about this recession. Very, very underrated recession, but nonetheless, this is the most recent recession that everyone recognizes from the negative back-to-back GDP results. And what happened subsequently after the recession was confirmed round about that December time? Well, we've got the approximate date tagged on the weekly, the daily time frame, but as you can see, when we do head over to the monthly, it does skew it slightly, so take it with a grain of salt. But nonetheless, we're looking at macro trends on this one. What you can see is immediately after this recession was confirmed, the stock market took an absolute plunge. How long did the stock market plunge for? It plunged for over a year, 485 days, and we went down, 55%, not from the top, but from when the recession was confirmed. Now, what's interesting about this is the stock market, Nasdaq, I won't go through all the individual stocks, it's basically the same as this chart. The whole stock market went down, right? So as soon as the recession was confirmed, everything was going down. What's interesting is when the recession was confirmed for the dollar, typically the dollar does grow throughout recession fears. It depends on how the basket of other cryptocurrency or of other fiat currencies are doing at that moment in time. But what you can actually see is immediately after the recession was announced, from the, well, yeah, we'll keep it from where it was because that was the approximate date that it was actually announced back in 2007. What you can see is we basically had a 1, 2, 3, 4 month dump that basically lasted, 8 months or so of dumpiness. So this was very, very boring. The dollar went down about 9%, but then what it did do is from the lows, it went up 27%, and from the announcement of the recession it went up almost 16%. So definitely some choppiness coming in for the dollar at this moment in time. If we do head over to what the stock market's doing, this is far more important than what the cryptocurrency markets are doing at this moment, in my opinion. What you can see is the Nasdaq is continuing out with its breakout, so this is really, really good. If you are a bull, like I've been saying, you do want to see Nasdaq come back down, bounce in this pattern, bounce in the daily EMA ribbons. That is what we've done. We've turned up, making a new local high on the daily time frame. However, I would definitely advise caution at this moment in time. While the markets are starting to look up, I would like to look at the stock market for some greater guidance. And what you do notice is when you do look at this, you can see in most recent times you've got double tops, breakdown, then when you do come back up, you can see we came up, had a one top, extrapolate this over. We had another double top formation, with this one actually coming slightly higher than the previous candle. And then over here, you can see we've got a top round about 12,900. From here, if we put more or less horizontal ray, you can still definitely see, the stock market, Nasdaq, stock market indices, they love making these double top, double bottom formations. That happens absolutely all the time. They work out very, very often. You can see here you had a double bottom coming up to a double top formation, pulled us down. You had a double top over here. I'm not seeing any double bottoms from this structure. You can actually see we had a double bottom, a perfect double bottom here into a massive rally actually, so that's not true. Coming over into here, you had pretty much a double bottom with some liquidity grabs down below. This is the daily time frame, so bear in mind we really didn't spend too much time from here. Double bottom coming up to what I potentially could think could be playing out as another double top, because obviously what we've got going on with GDP right now, nothing about that is bullish whatsoever. And also the bear market that we've had for the stock market, at least in my opinion, was really not too bad. So I'm going to be keeping my eye on stock market indices like the Nasdaq. I'm going to be hoping, well, personally I prefer to buy at cheaper prices, but I will be keeping my eye on the Nasdaq. If the Nasdaq has a bullish flip, if the daily EMA ribbons turn bullish, we come down, back test it as support, and then most importantly, if we do come up and take out this previous top, I want to see the market structure start to change, because at this moment in time it has not changed. You know, you've got a top, you've got a low, you've got a double top, lower low, lower high, lower low, double top, lower low, lower high, lower low, and potentially another double top. So I'm going to be looking at I'm going to be keeping my eyes once again on the Nasdaq. I think this is much more important than looking at the SPY and other individual tech stocks. But nonetheless, at least what's going on with the Nasdaq over here, nothing's changed in terms of the market structure. Fed didn't pivot, GDP was negative. So basically everything, unless this is for some reason, we've got all this bearish news priced in, and we've got, you know, the recession priced in, you know, 6 months in advance or so, then I personally don't think the bottom would be in at this moment in time. Now, if we do check out what's going on with the SPY, SPY is bouncing up very, very strongly. Harder than the Nasdaq today, up 1.25%. You can see SPX is turning up very, very strongly as well. A lot of these look like they're getting ready to flip bullish. And the dollar's continuing its descent over on the Heikin-Arshis. It seemed like we had a little bit of a bounce over on the EMA ribbons, and now we're continuing to get pulled back down to the downside. So higher time frames, the dollar is still in a parabola. So once again, nothing has changed in terms of its market structure. Previously, I remember a lot of people were looking at this, and I was one of the only YouTubers that was actually still bullish on the dollar back here. But the dollar, everyone here was saying the dollar was dead, it was done. And what we did is we fell through a lot of these EMA ribbons, but once we found the support at the absolute bottom, we rocketed back up just like we did over here and just like we did in these occasions over here. So once again, for the dollar, for the stock market, Nasdaq, stock market indices, individual tech stocks, the trend is your friend, and that is still playing out. Speaking of the trend, let's look at what's going on Bitcoin. So Bitcoin is still being trapped at this moment in time in this bear flag pattern. If we come over to the 4-hourly time frame, you can see this M pattern target that we initially talked about. I think this was 2 videos ago. This got perfectly hit. We actually overshot it slightly, and we were talking about in yesterday's video how we were going to continuing to expect a massive pump, hence the name of the title, Pump Then Huge Dump. And we're getting continuation with that pump. Bitcoin up almost 4% on the daily. You know, the daily started down here just below 23,000, and we managed to push up and just exceed 24,100. So this looks like a massive V-shaped recovery over on Bitcoin. This is still a lower high from here, and I believe there is one more chart over on Bitcoin that I'm personally predominantly looking at, this range over here, that I'd really like to see get broken in the immediate short term. Daily time frame, lots of volume is coming in for Bitcoin, so you are getting continuation, which once again leads me to believe, just like I've been saying in my past couple of videos, I do think Bitcoin is going to continue to move to the upside in the lower time frames. However, for me to become bullish in the higher time frames, a lot of things need to change, and I'll show you one of the fractals that I'm personally looking at right now, in which I'd want to see play out or to see get invalidated before I can become bullish in the immediate short term. Now, this is predominantly what I see in the charts, which is at this moment in time predominantly all bearish. However, I do want to talk about some higher time frame things in a second video, which is predominantly going to consist on on-chain metrics. So I'm going to upload this almost immediately after I do post this video. Bear in mind, it might take 10-20 minutes for YouTube to upload it. So it is what it is. Nonetheless, let's get the bearish news out of the way. And then if you are looking for potentially some bullish signals that I do notice, then be sure to stick around for the next video, which will definitely be quicker than this one. Let's talk about this. So the BTC liquidity grab fractal. Now, this is what I've noticed myself personally. If we start off on the daily time frame, get rid of the VPVR for now, and we'll report back to that in a little bit of time. So what you'll notice is Bitcoin has been setting up these bear flags, bearish pennants, all the way since its all-time high at 69,000. So we got pulled all the way down to 33,000. We bear flagged all the way back up to 48,000. And what you will notice with this is you've got bear flag, bear flag, bear flag, and within all of these you had a liquidity grab where you poke your head above the top of this trajectory, and you'll see what these green boxes are in just a second when we do turn on the VPVR. If we specifically, because I'm going to need to pull up a fixed range volume profile for this, if we look at the daily time frame on the VPVR, what you'll notice is there was a big liquidity box round about this zone over on the VPVR for the BTC price when Bitcoin was residing in this bear flag. And once again, looking at the data points, so this is basically an amalgamation of the data points and the VPVR, you can see this is where we spent a lot of our time around, but more specifically, this was where, you know, volume was pushed back down. There was a lot of sellers in this region, a lot of sell orders towards the top of this, as you can see highlighted over here on the VPVR with a large amount of selling volume. What you can see is we very quickly poked our head above this to grab liquidity before heading back down. And you can also see this, look at the next region over on the VPVR. You can see this is predominantly red with selling volume instead of green for buying volume. So for example, if we take it a range down over on the VPVR, you can see these, you know, you can very much see, eyeballing this, that most of the data was traded around about these regions. And because of this, you can see there's a large amount of green within this, meaning that people were propping it up with buying. And as you did push up above this green liquidity range, you more or less found yourself finding sellers. So this was a liquidity grab, filling a lot of sell orders. It was a quick short squeeze before we did inevitably head back down to the downside. Now, with these, I'm not going to run through every single VPVR zone. You can more or less extrapolate what I literally just said for this individual fractal here with everything that we've seen so far. So this is the exact same. You know, most of the buying and selling action was down here, yes, but you can see as you pushed up above this liquidity fractal, you start getting a lot of red coming in. Liquidity was grabbed before you did head back down to the downside, and over on here it's the exact same. We have to pull up the fixed range for the volume profiles for this one, but what you can see is right here. Obviously, we know most of the data was traded around these ranges, but as you do come to the top, as you get, you know, these large amounts of sellers right around this region here, we come up and we grab a bunch of liquidity before heading back down to the downside. Now this one is mixed on the VPVR, because bear in mind, you're taking in buy orders from these ranges, these ranges, these ranges, these ranges. So over on the fixed volume profiles, it's a little bit different than what we're looking at for this moment in time. But nonetheless, you can see liquidity grab, liquidity grab, and every single time we have these liquidity grabs, we momentarily poke our head above the top of these bear flags. Now, depending on how you draw them, because these are very ambiguous. Now, I've seen tons and tons of different drawings of how people have drawn these bear flags, and within this one that I've drawn specifically for this chart, you can actually see at this time we are poking our head above it. However, when I do draw it like this, which is, I'm drawing it like this because this is the initial touch points over here, and then obviously if you draw it down, you know, there's multiple valid ways of drawing this, but at least with this liquidity fractal, you can see that we have pushed back above this for the second time. You can see over here, we poked our head above this, we had a high, and then we broke back down, we poked our head back above it again, and we made a lower high with this fractal before rolling down. And at this moment in time, if Bitcoin does not clear this high up here at 24,260, then this could potentially play out for this fractal over here. And this is a fractal we've previously been looking at, but you can also see with this bear flag over here, you poked your head above it once, you poked your head above it twice to grab the excess liquidity from the sellers. Obviously, you know, the whales, market makers, they wanted to push it up, get those liquidity grabs from up here before we went back down to the downside. Same happened here, same happened here, same happened here, and these all corresponded to a move above the major areas on the VPVR, or the fixed volume profiles for this range over here. So It seems, in my opinion, once again, nothing has changed. I hate to be bearish, but it is what it is. In my opinion, nothing's changed in the charts. I can't come on and make a video saying, hey, everything's changed. I'm very, very bullish now when the Fed didn't pivot. GDP's negative. We're still in a massive, massive bear flag. And then you start to come down to the oscillators and you look at things like the money flow index, which on the daily time frame are super, super overextended. Things like the MACD are starting to head up from the heartline. Squeeze momentum indicator on the daily's heading up. 4-hourly time frame. The money flow index is very, very heavily overbought. MACD turned up very, very quickly as well, and so did the squeeze momentum indicator. So I definitely think we got very, very exuberant today, and subsequently we're probably going to have a very, very harsh pullback at some point soon. But nonetheless, I'm going to be keeping my eyes on the top of this pattern. Once again, let's remove some of these. Removing this, removing this, removing this. The top of this range is absolutely crucial. If we manage to have a volume confirmed break above 24,260 with a back test and a push up, it's going to be very, very bullish in the lower time frames. Once again, I have to reiterate this because I imagine some people might be getting confused with me switching between bullish and bearish. On the mid to higher time frames, on the midterm time frames, I'm neutral. On the higher time frames, I'm bearish. On the lower time frames, just like I've been saying in my past couple of videos, I'm expecting big pumps. We saw this today with more than a 4% pump since my last video. So once again, lower time frames, we're getting continuation. There's lots of room to move up on some indicators, however. I just don't think the trend has shifted at this moment in time. Dollar's still very, very strong. Stock market's very, very weak, making lower lows and lower highs. The Bitcoin price, Bitcoin is exponentially moving to the downside in the higher time frames. Yes, lower time frames we're bouncing up, but we are in a massive bear flag, so we do need to put things into perspective. What I will say, one bullish thing I will say in this video is if we do manage to have a successful flip of the EMA ribbons, then I will be very, very bullish, and let me show you why. If we pull up the EMA ribbons over here, let me remove everything and we can just purely focus on the EMA ribbons. Short-term moving average on the bottom, long-term moving average on the top. I've removed all the lines in the middle of the EMA ribbons because it's more or less just noise, in my opinion. So what you can see over here is the first fractal that we had. You had a massive breakdown, right? We were talking about this. This was a bear flag. So if I clear this up again, you can see this was the bear flag. And what pushed us down? Well, it was the EMA ribbons, but you can actually see on this occasion, we had a push above the EMA ribbons. We came back down to back test them. You came back up. You didn't take out the top, so that was your first warning. We started to roll back down, made an M pattern, back tested it and failed. So this was a very, very clear failed move above the top of the EMA ribbons. It really does not matter if you have a big move above the EMA ribbons. If you do not come down rather, back test them and then take out the invalidation point, it doesn't matter because it would have been a failed move, and this was a failed move. What do you notice with the next bear flag that we've got coming over here? Well, we actually moved into these EMA ribbons, we made an M pattern, and then we broke down. So basically, so far with all of these, you come into the EMA ribbons, make an M pattern, break down. You come into the EMA ribbons, and once again, we're poking our head above these here. So if we are going to break the trend, that is what I need to see to become bullish, because at this moment in time, nothing's changed. This is personally what I'd be looking for to become bullish in the midterm. Once again, I'd really like to see this flip of the daily EMA ribbons. I want to see a successful back test and then a push to the upside. If we can see something like this, I'll be calling for much, much higher price targets. But until something like that happens, then unfortunately nothing has changed in my opinion. What I would like to say though is really do keep your eyes on 24,300 approximately, because if we do clear this zone over on the EMA ribbons, in my opinion, the next price target, and this is very conservative by the way, would be, let's get rid of the EMAs, pull up the VPVR once again. The next area, once again, we talked about this zone many times. Over on the VPVR is all the way up here at 28,800. Pair that as well with the 200-day moving average, and I definitely think a converge of these after a flip of your EMA ribbons. So let's say we push up, come down, back test them around about the 24,000, 25,000 region. We could have basically immediate clearance to push all the way up as high as 29,000, 30,000, 31,000. I think we could definitely have a massive run to the upside. So, you know, once again, looking at things in the higher time frames really does help to not FOMO. I've had a plan for months. I've been sitting on the sidelines for months. I've been thinking we were bearish for months, and I've saved a lot of money sitting on the sidelines while everyone's been religiously buying the dip since like 50,000. But what you can see is in the higher time frames, looking at the MACD, looking at the money flow index, looking at the squeeze momentum indicator, these are not even calling an uptrend yet. So I think what a lot of people don't understand is that you do not need to buy the exact bottom. What I am is I am a momentum trader, so I'm never looking to sell the exact top. I'm never looking to buy the exact bottom. What I'm looking for is these signals to tell me, hey, the trend is starting to shift. We're seeing some of these signals, but nonetheless, you know, the trend is still your friend until the end, and until you do at least flip bullish above the EMA ribbons, until you take out this bear flag and move out bullish from this, I want to see more continuation in volume, because these are all just things that we're currently not doing at this moment in time. I want to see the dollar have a parabolic shift to the downside while the stock market makes record gains. I want to see continuation. I want to see this bearish structure over on the stock market indices like the Nasdaq, tech stocks, SPY, SPX. I want to see all of these shift, because at this moment in time, the trend is still your friend. And once again, keep your eyes on the weekly momentum indicators. Things like the money flow index, the MACD, and the squeeze momentum indicator have not even started an uptrend. So, you know, once again, if you're thinking you're going to miss out on buying and you're looking at heavily FOMOing at these regions, you know, do what you want. But in my opinion, you know, looking at the weekly time frame, if the bottom is in, we've barely started the uptrend. So if the bottom is not in, and I was wrong on that respect, I can see these massive flies all the way up to as high as, you know, potentially 33,000 if we do this very quickly. I think this is going to take its time. I definitely want to let the dust settle. And also, very importantly, while we're talking about moving averages, wrapping this one up, we talked about the 200 day. Let's talk about the 200 week. We have pumped very heavily above the 200 week with volume. I don't want to say volume confirming it, because you can see there was a massive increase in volume for 2 days here, and then it immediately flopped. So this is the name of the game. We're coming up to some very pivotal moments in Bitcoin's price action. 24,300. If you see a major flip of that, then probably by tomorrow, in the next couple of days or so, you're definitely going to notice a change in demeanor as I do flip more bullish on these markets. But once again, I talked about everything that I need to see to become bullish, so you know what I'm expecting, you know what I need to see. Flip of the daily EMA ribbons, this bear flag needs to be taken out, and I want to see continuation to the downside for the dollar, while the Nasdaq, stock market, SPY gets continuation to the upside. So I'll be making a update on some of the more bullish metrics and also the on-chain metrics in just a moment. So that's all I've got for you for the TA in this video. Hope to see you in the next update. And as always, my friends, Calway out. Peace.